Well, I'm back in the stock market. I put on my first option trades. We're going to talk about them in this video, and we're going to look at each chart and show you what I was looking at. And it feels good to be back in the stock market after locking in that six-figure loss a couple weeks ago. And I know I got a comment about someone thinking it was a fake video. I'm not sure why I feel the need to justify this, but here you go. It's a snapshot from the report. I blacked out my account name number because I don't want that out there, obviously. And you can see like the numbers are exactly what I said. I was up to 150% return since inception, and now it's down to 10%. And I'll try to duck over here so that you can see 10% over there. And yeah, so there you go. It's real. So this was an interesting article that I saw pop up. I saw another one pop up last week, and it was talking about how Nancy Pelosi's husband was buying some Apple and Microsoft calls at the end of May, so like May 20, May 24th area. And it's just kind of crazy to see that, like, when they did that, it sure did seem like it was the bottom. I mean, we're not we're not accusing them of inside trade or anything, but man, like sometimes they really seem to time that bottom. And so now all of a sudden, big tech seems to be going back up as a coincidence of all these call options that these guys bought just recently. So that's kind of crazy to see. Moving on, let's go ahead and look at my account and show you the trades I made. Looks like on my first day back into options, we're up $270, but that's unrealized, so it's not too important. My net lick is at 126 right now. My maintenance is only at 11,000 to secure all these positions. Now, I didn't put too much on today, and I'll probably wait until next week to put on more trades and try to vary up my expirations a little bit more. But here's all the trades I put on. And they're all, I think, they're pretty much green at this point. So I sold a bunch of positions, so I'm back to selling theta. That's when you sell someone the right to make you buy shares at a certain price. So I sold a put option on Home Depot at 265. That means if Home Depot is lower than 265, someone could force me to buy 100 shares for 265 for each share. So that's $26,500 to secure this position. And for doing that, they paid me $3.30, but since it's an option, you multiply by 100, so I made $330. That's money that was right in my pocket. I can take it out and spend it. I'm not going to. I'm just going to leave it in the account and try to grow it. But that's basically what all these positions are. I sold puts on companies I think will go up from now, and just let time/theta decay at the option and just make me some money over time. I'm back to theta gang. Let's go. You can see I tried to vary some of the expirations out a little bit, although I did get a little heavy on July 15th. And so next week when I sell more options, I'll probably target the week after that to try to make my expirations different. You don't want everything expiring at the same time if you can avoid that. And unfortunately, I mean, I didn't put any bearish positions on. I think, even though I think the market's going to go down long term over the year, in the short term, I think we might have a leg up for a little bit. So I am going bullish again. And we're just going to be selling puts on companies that we like. Maybe next week I'll throw in a couple of credit spreads. But right now, this is what I went with. So let's go ahead and start looking at this. One thing I do like or want to mention is, I always talk about margin ratio. So I'm not sure what I'm going to stop at my margin ratio at right now. 30% would be where I want to put my max at. So if I get to 30%, and what I mean by that is maintenance divided by net lick, and that's a ratio. Right now, if you do the math there, that's about 8%. So I got plenty of room to put more stuff on. The notional value, the value of all the stuff, if I put the shares, is about 65,000. So it's about half my net lick worth. But yet it only requires 11,000 to secure all that. That's the crazy thing about portfolio margin. Theta, you can see this means I'm making about $35 a day from just theta decay alone, assuming everything else stays flat. And if I go to this tab here, I just like this one because it shows like the days until expiration. So you can I try to vary them a little bit. I'm going back to targeting my kind of 30 days out, 30 to 45 days out. Amazon, I think there's going to be a short spike, so I did want to get like a shorter dated contract on it. And same with Apple, I think in the short term, like 23 days, Apple's going to be higher than 135. I think it's going to go up in the short term. Previous me would be doing bull zebras, but right now I'm limiting myself to selling theta plays. Eventually, maybe I'll add the poor man's covered calls back in and maybe the occasional bull zebra or bear zebra. So it's good. All right, so now let's go ahead and look at all the trades individually. So first off, we have Home Depot. On this one, I had to go back to the 2-year daily chart to see where that next level of support is if it goes down more. And from here, you can kind of see that happens at like 270 and above here. So from 288 to 270, there should be a lot of volume to slow down the pace if it goes down a lot. So I should have time to react and adjust the trade if it's moving against me. And 265 is obviously below this peak here, so plenty of time. You can see earnings, not a factor in this trade because we end before this comes up. And then for the RSI, it's kind of sitting in the middle of the pack. I normally would prefer it to be a little lower, but it seemed good enough because this volume is pretty high. It hasn't been down this level for quite some time. And you see you have to go all the way back here to be at that level. That's where all that volume comes in at. So it's getting near 1-year lows and 2 years where it's trading at, got that big support there. So that's why I sold this put. If we look at the trade here, I went with the 265. I got filled at $3.30, so it's already up almost 30%. And a quick thing that I like to do is I like to target 1% a month, and basically 1% return would be if this equals this, so 2.65 would be about a 1% return for a quick math. So 330 is higher than that, so it's at least the 1% return, which is what I like to target when I'm putting on option plays like this. So that was Home Depot. Next up, we have Amazon. I don't like Amazon that much right now. Anyway, Amazon, I thought this was a pretty safe play because I think in the short term, the split news and like the shares being split is going to cause it to go up. I think it's just going to change the buying sentiment, basically. Let's go to over on the 2-year chart. So sadly, the next level of support here is all the way down at 108. I think on this guy, I was more so looking at the 1-year, 1 day. So you see a little bit further out here. So it should trade in this area a little bit, and then it might pop up to 143. If it gets to like 50% return quickly, I'll close this one. I don't really feel like holding it because Amazon, not on my favorite list right now. If it does go down, it should slow down around like 108, and at that price, I'd be fine holding the shares, even though in reality, I run a no assignment strategy a majority of the time, so I would just roll that position. But 108, it should be a sticking point if it does go down. Again, earnings, not a factor in this. RSI is in the middle of the pack. I would like to see implied volatility being higher than historical volatility, and it doesn't look like that's the case right now, unfortunately. But there you go. Anyway, what I end up doing on this one is I went shorter time because I know Amazon can move quite a bit really fast. So June 17th, so just 10 days, which means theta's going to be pretty high. And I sold the 113 put. And I sold that for 118. And you can see this is already down to 70 cents now. So you might actually see me close this one tomorrow. I'll talk about another day trade. So the delta, you can see 14% still. And that's basically what this guy is. If we did go further out in time, obviously that would be worth a lot more. But again, you look at the delta, and this was actually more like 40%, I think, when I was looking at the trades. 23. I might have been tempted to do it if it was 23, although I probably would have lowered the strike price down significantly. And to get like the same amount of credit here just didn't make sense because I could make the 130 right now by being at a level that I'm comfortable with versus having to hold this stock for a month. So that's kind of where my decision to go short term is I think Amazon can move quickly, drastically. Like, I don't like the PE ratio where it is now. It's pretty high still. But I think the shorter dated contracts on Amazon is going to be my play. And obviously, that's what I put on. Next up, we'll do CHWY. I did put 2 contracts on this guy. And this is more so because it's at like the lows right now. I actually sold the 22.5 strike, and you can see that volume, it should be sticking around 27 for a while. Let's lower this to let's go back in time, maybe 2 years. Like, it's just at like all-time lows. It's amazing. So I think I have a good price on it. Going back 5 years, 2062 is the low, and I have sold the 22.5s. We'll take a look at the option chain. I did July 15th. This is a stock that strike price I felt was really comfortable on CHWY, so I did feel comfortable going further out in time. 38 days, and you see again, kind of in that 15 delta range. The 15 delta range just basically means 85% of the time it should expire out of the money. Now, don't take that as like a hard fact. Like, this number is always changing as the stock goes up and down, and other factors affect that. But it does seem to be something that you can use to help you guide, like when you're being too aggressive on an option, such as like I won't go above 30 delta when I'm selling a position like this. So I collected 102 for this. It's already down to about 88 cents, so it's up right now. But it's got plenty of time to sit there, so I wouldn't count those as wins yet. Next up, we did Ally. I've had good success on Ally. I just like the company overall. Go to the 1 year, 1 day. You can see the low is at 37. I end up selling below that at 36. There's no like volume peak under here in the 1 year. I doubt there is on the 2 year. Well, 34 level here, I guess. But this one is one I wouldn't mind actually owning the shares at the price that I sold. And I will be honest, I was tempted to put on 2 of these contracts. This is actually what I sold, July 15th, 36. And I got 50 cents credit. It looks like it's already down to about 40 cents, so my play is up. The delta, I think, was at 16 when I sold it, and now it's at 11, so that changed drastically, given that the stock only went up 31 cents today. But that's Ally. You can see all these plays are kind of just the RSIs in the middle, and I'm using the volume to kind of help look for where that level of support will be. On this one, unfortunately, implied volatility is actually lower than historic volatility, which is not a good sign, but everything else, and the fact that I actually like the company, makes me comfortable holding that one long term. Next up, we have O, the great dividend stock. Over the last year, it's only been below 62.54. Sorry. I sold the 62.50 strike. It has not been below that in the last year. If you go 2 years back, I think it is below that. And again, just hover around 60. So like if this was in trouble, it'll probably hover around 60 for a while, and you can roll for a credit. So I just felt like that was a comfortable spot to sell an O put at. It might finish in the money. Who cares? Just roll it. I don't think it would drop much more than 60. We all know that real estate rent is going up. Like they're set. They're set for fine. They're good now. Last one I did was Apple. You saw that article about Pilosa and how they sold or bought some call options on Apple and Microsoft, so might as well get in on some tech too. So I sold a put on Apple. I sold the 135, which is where this peak is here. It touched this and bounced off before, so hopefully that'd be a support if the market does decide to go back down. And if it doesn't, who doesn't mind owning Apple? It's a money printing machine. And again, RSI is kind of in the middle. You prefer to see it be a little lower, but we just had this low and now the market's trending up. So that's why all these RSI factors are being kind of in the middle of the boat. Analyze, I went to the July 1st. It's a little shorter because I was trying to vary my expiration dates a little bit. I sold the 135 for $1.69. You can see it's up, so I guess Apple went up a little bit. So it's already in the profit. And we're sitting at 15 delta, which, I think these are a good series of trades I put on. Collected about $925 in credit for selling these. If you assume we do 50% of that would be like realized gains, that should be about $500. Probably more because I tend to hold more stuff towards expiration, so probably be more like 75% of that will end up being profit. But I mean, we got like 38 days to find out. For those of you that sent more comments on YouTube, thank you. That was very motivating to me, which also helped me to feel motivated to make this video today. Because I'll be honest, I was kind of struggling to come up with ideas to make videos, and especially since I wasn't actually making trades, I really didn't know what to do. If you have ideas for future videos or stuff you want to see, leave a comment below. I'd love seeing ideas, and I could use help coming up with new ideas. I hope you guys had a good week trading or a good start to the week, and see you guys next time.